Welcome to the April 24th, 2023 Advanced Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. This is your weekly fast-paced tour of the global financial markets put together by McGowanGroup Asset Management. I'm president, McGowanGroup Asset Management, and we serve affluent families from the Crescent in Dallas. Each and every week we do this as a client update, and I'm glad you've tuned in. If you're not a client and you have a boring financial advisor that you don't like, well, you should probably set a time for a brainstorming session. You can go to networthradio.com and you can contact us there, and we'll set up a time to improve your plan with a team that's actually fascinated by the financial markets, and therefore we're generally more knowledgeable and more excited about what we do than a lot of the other choices out there. So glad you've tuned in. This is the Dow Jones Industrial Average year to date. And this is the depths of despair during the March Madness sell-off with the banking crisis. What happened here? The Dow's back to about 34,000. That's back to February. What happened then? Well, we didn't have the banking crisis, right? And it appears that that's at least temporarily solved. And that's one of the things we said. Now, what were we doing down here? We added 3 great blue chip names right around here. We don't always get our timing perfect, but we like to use our tactical safety and our cash flow to pick up bargains when everybody else is scared and prices are cheap. We did that in the pandemic with global high yield and other categories that have performed reasonably well. And we always raise tactical safety when we hit high points. That way we've got dry gunpowder. That's the way tactical allocation works for McGowanGroup Wealth Management. This is the S&P 500 earnings so far. 87 out of 500 S&P companies have reported. We've heard relentless talk of a recession. And earnings actually did go into a recession about 6 months ago. Earnings have been down for about 6 months. So how bad is it? Well, the theme, if you read the financial headlines right now, is better than expected. That's consistent with the Atlanta Fed projecting 2.5% GDP economic growth in the first quarter. That's not a recession. So here you have the earnings recession. Earnings were down 1.5% for the companies that have reported so far. Sales actually healthy, up about 7%. That's very different from what you see in a market that's going to collapse further after last year's collapse. I have another bulletin. We've got a big gain in the NASDAQ so far this year. It's up 18%. But if you do the math from the end of 2021, right, that's when the Fed tightening cycle started to torture the markets, and that appears to be almost over. The May 3rd meeting, they may go up 0.25%, but they've essentially reached their target as the way they define it as trailing 12 months inflation. But anyway, if you bought the NASDAQ at the end of 21, which a lot of people did because tech had done great, then it went down 32%, then it went up 18%. Do the math, well, you're down 20% from the end of 21. One reason why. Earnings growth this quarter for the NASDAQ 100, which is about half tech companies, and they really drive it because they're the biggest capitalizations. And so you have earnings growth of minus 27%, but the price is up 18. Okay. That says that may not be the place that we want to be right now, especially because there's not any significant cash flow. Top 10, bottom 10, the last 90 days, which included the banking crisis. You'll see that pattern come up here too. This is the top 10 in the S&P 500, top 10 gains in 90 days, and the bottom 10. This is a way to research what's working, right now. And you can see it's the tech bounce back. Facebook, Meta, NVIDIA. Apparently they have one of the best AI chips out there going on eBay in the used market for around 40 grand. Align Technology, Pharmaceutical, West Pharmaceutical, Fortinet, Arista, Salesforce, GE. Wow. So GE had a nice bounce. GE Technology, both of them did well when they split it. And First Solar. We have in the growth portfolios First Solar, not a recommendation for your portfolio till you come down and get a plan, but we got 1 out of 10 there. We don't have any of these, and these are the banks. We go Citizens, Schwab, Truist, KeyCorp, Comerica, based here in Dallas, Zions, and First Republic. The 2 non-banks actually were Match Group and Dish Network. And so when you look at those, it's telling you, okay, there's a big problem in those areas. We know that the regional banks are having a hard time as deposits flee. The banking crisis will continue to plague a lot of the regional banks, evidenced by what you see here. So we're going to stay away, and we're also staying away from real estate. We love real estate investment trusts because you get a dividend. However, with the refinancing crisis, that category and the regional banks, everybody thinks, wow, it just went down, so I should pile in. Actually, it may be December of 23 or December of 24 before we do the categories of either regional banks or real estate investment trusts. Go to networthradio.com. You can contact us there. Thank you for tuning in. We'll be back next week. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.